And bam, just like that, it's Friday, Pat.
Hey, how you doing? Yeah, I know.
Pretty good.
I was thinking that. I was just thinking that today, or I was like, what happened to this week? It's
I
just,
know. It's been brutal.
I mean, we're talking 4th of July next weekend.
I know.
It's just, yeah, it's.
I wanted to throw this up there for our subscribers. I did a survey. Is it possible to see a balanced market by the end of 2021? 25% of our viewers said yes, 46% said no, and 29% said it's too early to tell. It's interesting results. Now, I also hired a firm to do a deep dive into our subscribers, Pat, kind of analyze the subscribers we have, and they came back conclusively and said that they are smarter and better looking than most of the subscribers on other real estate channels.
Yep, I would probably agree with that.
Yeah, we knew that. I probably could have saved money, didn't need to do that. But it's an interesting trend that we're in, and the Cromford report validated some of the numbers I've been tracking, so I'm feeling pretty good about that. So, it's interesting watching our march towards Saturday now. Wednesday we had 5,442 homes. Thursday it went up to 5,581. This morning we had 6,038, and right now we have 6,162. Last Saturday we had more listings come on than Friday, which is the first time since we've been tracking this, Pat.
Mm-hmm.
And we came up to 6,100 homes. We're already at 6,162 now. And the interesting one where it's really changed is over the 7-day moving average. And I'm going to pop over the Cromford report in a second to show you what they're saying. And we have 4,154 homes come on the market this week, of which only 3,708 went under contract. That's a difference of almost 450. So that's the number that's dropping. The number of homes going under contract is dropping slightly, but the number of listings that are coming on faster. And so it's going to be interesting. So here's what the Cromford report says. And they're saying for the third week running, we have all 17 cities moving in the same direction as last month, favorable to buyers. And it said the flow of new listings has been strong, with just over 10,000 being added per 28-day period across all areas, all types. This excludes coming soon listings in the same period in 2020 and 2019. We saw in between 8,500 and 9,000 new listings every 28 days. The extra 200 to 400 listings per week are helping to grow inventory back towards normality. And that's the number we've been tracking. So there's between 250 and 400 listings, and that's exactly what we're seeing. But there is still a very long way to go. The bottom city is Tempe. Look at theirs is 294. Now, a Cromford index of 300 was thought to be astronomical at first. Now we're just ho-hum, and we still got some in the 693. Fountain Hills at 556. That's strong seller's market. But it's trending that way. And I think that if it stays at this same rate, the bidding wars will fade by the time we get into the fall. Mm-hmm. One of the subtle things that I'm seeing, Pat, when I'm reading the MLS descriptions, I'm seeing less and less of agents saying showings on Friday, Saturday, Sunday, and reviewing orders on Monday. So the confidence level isn't quite there anymore.
Yeah, you're starting to see it. I mean, I'm hearing from a couple of different, handful of people out there that I'm talking to. They're like, yeah, I've seen different posts saying that, things, it seems like we're at a kind of a not breaking point, but there's a little crack. And
we've plateaued.
Yeah, I think you're going to see this. There's still the demand, but, you're going to see the demand. I think what people are looking to maybe buy the next couple of months is, there's no way you're going to be able to hit the bottom in real estate. The only time we ever saw a true bottom was, September, July, August, September of 2011, June, that area. That was the bottom. I think people just have to use this. If things do slow up a little bit, they got to use it as a entry point to get a home that they want. That's not, we're not as crazy bidding wars.
Yeah, I'm going to show a couple examples of those too, and then check this out, Pat. iBuyers.
By the way, bar 60. Hello, how you doing? Good afternoon.
I'm going to share this screen here. This is iBuyers, which is Open Door, OfferPad, and Zillow, Redfin, and Knock. Knock is leaving the market because they're worn out because they bought 2 homes this year, so they're tired. They're going home. Open Door, homes purchased in May of 2021, 347. Purchased in May of 2020, only 23. So in 2020, they were starting to get back on because remember they all shut down in March. But the fact that Open Door bought that many homes in 1 month tells you that they are convinced that the next 90 days are going to see a good return on their investment. So they're not worried about it.
Yeah.
Here in Sierra Vista, someone is asking $1.3 million for a house. Greed. Won't even show photos on the listing from what I can tell. Fooling their money, soon part. We've been talking about this on the morning live streams, that I think at this part in the escalation of pricing is when you start seeing the silliness come out. Oh, I heard my neighbor got this. I heard my neighbor got that. So when you see a price reduction, it's not really prices in real estate dropping. It's people going, oh, I guess I couldn't get 1.3 million for that.
Yeah. Yeah.
And it's worth it's worth trying, I guess, but it hurts you.
Yep. And like you said, I think people have to just be, not, but you're going to have these buyers that like, okay, oh yeah, the market's falling, it's coming on. We're seeing listings going up and contracts, kind of decreasing, but I don't think, we're still going to see a strong market. I mean, unless we see rates go up just through the roof. Obviously we've had inflation. Inflation's been running hot, and the Feds are trying to tap that down as far as it was interesting. Remember a couple of weeks ago, I said, I didn't believe, this transitory thing that, they said the inflation was going to be transitory. It's going to be, now the Feds are coming out and saying that, they're saying what I was thinking is like, no, this is not going to be a 2 or 3 month phenomenon. It's going to be 6 or 9 months. And Powell came out and said, well, it's going to be a little more, the transitory time is going to be a little bit longer than expected. And I think now the markets are not really caught up in this inflation because they know now, inflation's running hot. Because, the markets, the rates, we got a high inflation, and the rates were kind of like, okay. They should have spiked.
Yeah.
They didn't. The market does not like surprises, and now they know the inflation is not a surprise. I think the surprise coming next is going to be like, okay, hey, this is running a little bit longer than we expected, and now inflation is here to stay. When I saw that, thank you, Bar. I didn't believe. Like I said, it's us, looking at the headlines and saying, no, I'm not hearing that and seeing that. When he said that, oh, it's going to be transitory for 2 months, I'm like, it's going to be, it just doesn't, you're not going to turn inflation off and on with a switch. And that's almost the way their rhetoric was, is like, oh, it'll be gone in 2 months.
Yeah.
Things are going to start getting baked in.
We've done this before.
We've done this before. It's going to be baked into it. Now, I think the Feds are trying to, obviously, I think there is going to be tapering, they're trying to get, they know they're awash on mortgage-backed security market. The MBS market is, there's a difference between that and the treasuries. And I think they're trying to pull back from the MBS market, slowly but surely. Like you said, you're not going to see this in the news because they're not going to come out and say, yep, we're going to stop, pull back on that, because they're going to have the temper tantrum again, or a taper tantrum.
Well, they did a bank stress test, and the banks did very well. And so the Fed's going to lift their COVID area restrictions on bank dividends and buybacks after the stress test. So they were saying that the largest banks may immediately boost their planned dividends and share buybacks as a result of the Fed. So they were saying that, that the stress test was great, that they have enough reserves, they have enough, they don't have enough capital, but the banks are not in dire straits. So, the stress tests are something new that they implemented. And then here is an interesting story I kind of want to illustrate to people right here. This is a townhome in Fulton Ranch. You ever buzz by this one, Pat? It's kind of off of, I think it's not off of Ocotillo.
Fulton Ranch, I've been by it.
Yeah, it's just past Ocotillo. So anyway, they're really nice looking townhomes, right?
Mm-hmm.
And I love their open living room that they have. So they're pretty nice looking places. But the story on this one is kind of like what Bar just told us about Sierra Vista home. Their original asking price was $385. So now you're looking at that, and we're getting priced out of the market, and I can't afford this place, and everybody's going to overbid. Well, there are ceilings on every house that's out there, and this guy found his ceiling because look, it's on the market for 48 days,
Mm-hmm.
and it's sold for $350. So the message is, when you see that home and it's been on the market 30 days, then pounce. Offer your price. This guy, they got this one, what, 35,000 lower? Yeah, 35,000 lower than the asking price.
Mm-hmm.
But they finally had to drop their price to, well, they originally started at 390. And then they dropped it to, well, started at 385. They raised it to 390. That's always a good plan. And they sold it for 350. So they were too high. So, but it was an opportunity here to, instead of just ignoring that home and thinking, well, they're asking too much, somebody finally made the right move and said, well, I'm going to go in and offer them 35,000 because it's been on the market 30 days. No bidding wars, no appraisal waivers, got the house.
Mm-hmm. Mm-hmm.
So they're out there. Just Mix says stress test was predicting housing prices dropping by 55% third quarter 2021. Obviously, that's not happening since we're already there. But what are your thoughts about a possible drop? Well, the stress test was just to see if the banks would survive if real estate crashed. And so what they're saying is the stress test is to find out how well banks survive if we have a severe recession. And their numbers indicate that they're gonna do just fine. The numbers that we're looking at now on supply and demand don't show any chance of prices plummeting in the end of the year. That's a 6-month prediction. It's pretty safe just based on today's numbers. Beyond that, I still don't see a crash, but I just don't.
Once again, we go back to, I know we've been pounding for last, it's like a broken record, but once again, it's the loan programs. I had my ex-girlfriend call me today. She's buying a condo in Florida, and she was going through a bank, and she goes, "Oh my God, the paperwork, paperwork that they were providing." I said, "Hey," because she hadn't bought a house in 15 years, 20 years, and she goes, "Oh my gosh," she goes, "the paperwork." I go, "Hey, it's a necessary evil, and this is what has created a stronger market." And I'm sticking by that theory. I mean, that theory, the loan programs that we wrote in 05, 06, 07 were just shitty. And they, and as a matter of fact, I went as far as to recommend, I said, I looked at her loan estimate. She was going through a bank, and me being a broker, I said, "Hey, I could refer to a broker in Florida." And, she saved $2,500 on the quote. And about three quarters of a point, they were all quoting her 4 1/4, 4 3/8, and he got 3.5, and knocked out about $2,700 in fees and whatnot. So,
and I want to talk about appraisal waivers too in a couple minutes, because we get a lot of questions on those, and I think it's really a misunderstood formula, for lack of a better word.
Yeah.
The CDC extended the eviction moratorium a month, and they had to come out and go, but it's the last time, because they were about to get slapped by the courts, because there's a lot of discussion whether or not they even have the authority to do that. So renters are not getting kicked out next week; they're getting kicked out next month. So the housing market shows signs of softening. Has it topped out? It's softening. I think we saw the peak. But
it's going to find a new base.
It's hard to tell because we're still going up at 3% a month. So I think we're near the peak, but we're not at the peak yet, because 400 home difference is not going to adjust prices.
No, it's not. I mean, those are the type of headlines that people, it takes, they start reading. It takes the time to get through to people, it's all psychology. I go off a lot of psychology, and the psychology has been people have been rushing out. I get it. We're in a supply and demand squeeze. We're in a short squeeze with real estate, but it's kind of like a stock that went from 10 to 20, and you think it's going to go to 40. It goes to 10 to 20. Buy it. See if it backs off at 16 or 17 before it'll give you an entry point. And I think that's what real estate's going to do. Is it's going to back off a bit and give you an entry point to kind of get into a house that you want. But
we're up against the affordability threshold right now, so people are waiting. I think there's the buyer fatigue, and
I think it's more. The affordability thing. I mean, like you said, I think it's more buyer fatigue because I think the people. Once again, if you got your debts, if you got relatively no amount of debt, people are surprised. I'm most often surprised when I get somebody calling me. I'm like, I don't know, I'm not going to be able to get this person qualified. And all of a sudden, because they make X amount of dollars, but then they're like, I have no car payment, no credit cards, but I make X amount of, $5,000 a month. I'm like, hell, you can,
Yeah, they're dropping out because they're getting outbid and beat up, and they have to write ridiculous offers.
It's not the affordability, because I think the media. Just jump in real quick. What ticks me off is that the news is using this median priced crap. On the median prices of homes has gone up. Yeah, I mean, correct. I don't know what your feeling is. I know we're talking off the cuff, but I mean, I just think using the median price is kind of a bogus way of. Because that median prices in all the $2 million and $3 million and the $1.5 million homes are going on the market too. So they're throwing that in the equation.
And the median price goes down in summer because in the summer, the high end homes are usually pulled off the market.
Yeah. So a median price to me is kind of a bogus number. I mean, I don't know. I just, homes have appreciated, but like I said, when you start throwing in $1 million, $1.5 million, $2 million homes for that median price, and they've been going, they've been selling. Those stop selling, you're going to see the median. Then you're going to see the news say, median prices are have gone down 10% or 15%.
Yeah.
The market's falling. Oh my God, this is the crap.
You've got to read the detail inside the headlines.
Yeah.
So, beautiful new home came up in Ocotillo down in Chandler for $1.788 million. There was one on here I saw the other day that was, here it is.
When did you get into my house to take pictures?
You weren't home. 1.299999. Go ahead, kick in the extra dollar, and I offer him 1.3 million.
Yeah.
So I mean, that's just how long did it take him to go? Do we want to go 1.299 or do we want to go 990 or 999? Those crack me up. So, okay, let's talk.
And that's the thing.
Let's talk about appraisal waivers and what they mean. I think when you first say appraisal waivers, the first thing that hits your mind is that I'm just not going to worry about whatever the house appraises, and I'm going to have to pay the difference. Is that what you think the perception is by most, buyers?
Yeah, nobody, 99 out of 100 people don't really understand what an appraisal waiver really is. There's certain things, criteria that. Yeah, go ahead. Yeah, you're right.
Yeah, there's language in the contract about, meeting the appraisal. And basically it just says, if it doesn't appraise at your offer price, then you guys are going to have to negotiate where you're going to sit. So let's just use a $400,000 house, for example. And I offer them $400,000 and it appraises at $390, then I can walk away from the contract because it didn't meet. I'm not going to kick in that extra 10 grand. Or I can go to the seller and say, are you willing to pull it down to the appraised price? Or I can say, I'll tell you what, I'll meet you halfway. You pull it down 5,000, I'll kick in 5,000. And that's the way the appraisal market used to be, right? So now we have another question. I'm seeing more homes hitting the market that was just bought a year ago. Yeah, there's a lot of that going on. So here's what's happening now. So let's take that same $400,000 house, Pat, and I offered them, because of the bidding wars, $415. But I don't know if it's going to appraise for $415. So I have to cover that difference because the seller knows that if it doesn't appraise for $415, it's somebody's still going to buy it for $415. So what you do is you craft some language in there that covers you. And one of the best ones I've seen here says, The buyer will cover any appraisal shortfall from the offer price of $450,000, no greater than $25,000. So that's your limit. You know that you've penciled in $25,000. Here's an appraisal cap language. Should the property fail to appraise, buyer agrees to pay X amount over the appraised value. So let's take this $400,000 house. If it doesn't appraise at our offer price, I agree to cover up to $15,000 higher than the appraised value. So if the house comes in at 390 and doesn't even come in at 390 plus 15 is going to be my sale price. So you've capped and said, I got $15K sitting over here that I will use to cover any appraisal gaps, no matter where the number comes in, up to my offer price. So if it appraises at 415, the sales price isn't going to magically turn into 430.
Yeah.
So it comes in at 415, then you only have to pony up, a partial amount of the money. And a buyer and seller agrees that in the event the property fails to appraise, new purchase price will be appraised value plus certain dollar. So you're covering yourself there. Now there's an appraisal contingency modification. And this one says, in the event that the premises fails to appraise for at least the purchase price in any appraisal required by the lender, the buyer agrees that the buyer's down payment shall be increased in the amount equal to the difference between the appraised value and the purchase price, provided that the difference does not exceed your amount. So when you're writing these appraisal waivers, you want to know what your exposure is. So if you've got the cash and you've got an offer that's above the asking price and you put in the language, you've got a worst case scenario that says, I'm going to get hit by $15,000 if it doesn't appraise at $400,000. But what we're seeing more and more is that while real estate's going up at 3% a month, that they're getting very close to the offer prices in many, many cases.
Mm-hmm.
And I've been lucky twice where both of them came in above our offer price, and we were feeling like we were really stretching it on that offer price. And we wrote one for $15,000, the appraisal gap, and another one for $25,000, neither of which we had to use. So it's important that you cover yourself.
Well, I think it's important too. I'm just going to general, because I know buyers, when you're involved in a transaction, it's important for people to really understand what because a lot of times people say, yeah. They hear you, but they're not listening. Does that make sense? I mean, there's a lot of people out there. I'm seeing people like they're still confused. I think it's something you got to really sit down with the agent and say, hey, okay, so you really understand what's going on.
Yeah, you have to spend a lot of time on this topic because it's really misunderstood.
Yeah, no, and people, you want to have a real good understanding. And I was just thinking about this in general terms. I mean, I'm kind of going to digress for a second, as as I do sometimes. But think about this. We're going through. This started, about a year ago. About 7-8 months ago, would you say? With these, crazy?
Not really a year ago, but I'd say 7 months max.
7-8 months ago. But people have to realize. I mean, we're in a new. We weren't talking about this a year and a half ago, doing this crap. No. I mean, before people go on a Friday, find a house. Yeah. Back about a year and a half ago, it was starting to tighten up. The inventory was starting to tighten up. It wasn't before the pandemic. But I mean, it was because I remember a couple of people were looking, they were having a tough time. It wasn't as bad, but people have to realize that this is not going to go on forever. It might be a year down the road that we're talking about. Remember with those appraisal gap? That's going to happen. I'm making a general point, but look at how we've evolved. If people would think back, look how we've evolved. Now it's like this appraisal gap stuff, that's eventually going to taper down. That's kind of my general economic. I think
we'll see it sooner rather than later. It's just,
it's
traffic on the weekends now is not what it used to be.
Yeah. Let's see these investors we got a question.
I'm guessing these were investors that were selling prior to capital gains taxes going up. What do you think? I don't think we're seeing investors selling worried about capital gains for two reasons.
I haven't heard that too much.
One, their cash flow is too good.
Yeah.
And two, I don't think there's a lot of confidence that capital gains tax is going to make it through the Senate.
Yeah.
And
Yeah.
if I'm an investor and I'm worried about my capital gains and I'm already got good cash flow, I'm going to wait it out. I'm going to say, it's possible that this Congress could flip in 2022. But from what I see now, that capital gains increase, I don't think it's going to see the light of day. And I'm not a finance guy and I'm not an investor, but just watching politics like I do, I don't think that has any legs. So I don't think there's a run towards that. And now, if they put it in the bill and the bill gets signed, then yes, you'll see selling possibly like crazy, unless they try to write in something that says it's retroactive, which again would not see the light of day.
Once it's retroactive, you're screwed either way.
Mm-hmm.
I mean, you're basically in the snake pit already.
Yeah.
You can't get out.
There's one more I wanted to read here. The simple language, it just says, and you sent this to me last night, buyer waives $12,000 of appraisal contingency and will pay $12,000 over appraised value up to $412,000. So obviously they were asking $400,000 for the house. They offered them $412,000 and they said, hey, we're going to give you $12,000 beyond the appraised value, but we're not going above $412,000. So if it comes in at $395,000, we will give you $12,000. $395,000 plus 12. That's what we're agreeing to. But that's, you're going to get less than what you wanted, but that still covers both the seller that's being assured that, he's going to get $12,000 above whatever the house appraises at. And it caps the buyer. That's the most important message that I want people to understand. Make sure that the language that's crafted caps the amount of money that you're.
Oh, did we lose you, Rick? Rick? Not again. Did I lose you again?
You hear me there, Pat? There we are.
There we go. Oof.
Okay. Yeah, boy.
Nervous. Jesus.
I'm going to remove you and put you back on so that you're now Pat instead of me. So
you're like the girls in my life. You just pop in and pop out, and you scare me.
It just went bam.
God.
Speaking of that,
we got back.
Our audience is 88.2%. Man, we're still at. We lost them again. I'm back now. So it's you live by the tech, you die by the tech. I don't know what happened. So I should probably not touch my mouse again. But that's hard to do when I'm looking at this. So what I was saying before I disappeared is, I really want buyers to understand, make sure you have a cap. Make sure you know your worst case scenario. And it's not as bad as people think it is. There are offers getting accepted that would surprise you. So keep swinging that bat. And you may bid on 10 homes and get beat up. Now for sellers, this is a great time to sell if you price right. And you can be assured that if you priced too low, that will be rectified very quick.
Yeah.
So if you came in at $390 and a house was, probably worth $410, you'll get $410. Yeah. If you come in too high, like the couple of examples that we show, you're going to have days on market, nobody coming to the house. People don't write lowball offers anymore.
No.
Because you just think, they're never going to look at it. And they might not, but.
And I think people, when they write an offer and they write, talk about the content, I'm just, once again, just talking general terms. Sit down and just separate your emotion and the finances also. I mean, like I said, I'm just talking to buyers, because you have to take into consideration, if you got a good chance at a house, you got to look at the house, look at, all the things, the factors that go into that, but also how much time you spent. If you got a good shot at getting an offer, put in a good offer, because look at the time. Maybe you spent 5, 6, 7 months looking for a home and put in 20 offers. The time, how much is that time worth? If you're 10 or 15,000 over offer, and you love the house, once again, it's about your interest in getting the house and making sure you separate and keep your cool level head, because a lot of people say, I'm not doing that. I'm going to not do that. But think about how much time has already cost yourself, 6, 7 months of looking for a home. You could have been up $10,000 or $15,000 had you been in a home 6 months prior.
Yeah.
So I know I don't know if I'm making sense, but I mean, people got to take that into consideration, not just look at the dollars, the hard dollars. Look at your opportunity costs that you've lost or you could gain by getting into that house. So just, we're in a very interesting time frame. This time frame is not going to last.
Well, I'm glad to
you and
see
I are
that
trying to
nobody tried to put together any financial products to use for appraisal gaps.
Yeah.
I'm glad that
Yeah.
nobody tried to get creative on that, because that would really make a muddy mess. Hey, you can have a second loan here to cover your appraisal. No, I don't know what's going to happen. But I agree with you that look, if you want the house and you want to get in it, and
Just
you're
be
just
smart
missing
about it.
out a few,
Yeah.
just don't be crazy and go, okay, then I'm just going to go 25 over and eat up all my cash that's in the bank. You might not have to.
Yeah. Yeah. There's a lot more thought that goes into buying a house now as far as accepting an offer. And, I mean, like you said, it's easier said than done, because if you've been out looking, I mean, I'm just trying to give people words of advice. If you've been out there for 6, 7, 8 months, you get getting beaten up, you're either emotionally drained. You're like, okay, let's just put offer in for 20,000, just sit back, take it, have a beer, have a glass of wine and think about it. Well, okay, what's my opportunity costs? Let's be smart about this. We've been looking for 7 months. We like this house. If we offer 15,000 more, we want this house. So, and because a lot of people say no, and then they get, there's other people that get stubborn. They're just like, nope, I'm not moving. Budgeting.
I'm not budging. I offered them this, and that's it. I'm not budgeting. Get within $5,000. Nope, forget it. Well, that $5,000 is if we're going up 3% a month, that's gone in a week and a half. And so,
just be like I said, just my whole thing is just be smart. And don't try to minimize your emotion. And that's what a good agent, I think, will do. Like you have you really look at it. You understand. You're a very empathetic agent, but also you're very black and white, in a good way. Like, hey, let's think about this. So
yeah, because you have to. I mean, sometimes I've looked at young couples go, "I'm not selling you this house."
Yeah.
I go, "No, I wouldn't sell it to my kids." Oh gosh, hey, get this. You saw me staring at my phone. Finally, we recorded on this house. Get this. They have to take the deed, right? And they send it to the county. And the county rejected it twice yesterday, said it was too faded and they couldn't read the notary stamp. So they had to wait till today to get the original ones. And I've got this app on my phone that says whether or not we've recorded or not. And there it is. So it's like, I said, I don't want to go into the weekend not recording. I don't want to do it.
Yep.
So, now sellers are they're coming back into the market from the simple fact that they know that they can get a good price right now. But yet a lot of them are waiting because there's potential equity up ahead. And I think that's a safe bet right now, because our inventory is still low. Even though it's climbing up right now, your home will be worth more next month. It's already been baked into the cake, right?
Yep.
And 60 days out. So you're okay. If it turns, it usually doesn't turn very quick. So the first thing you're going to see is that 6,000 number that we see now turn to 7,000 and then 8,000. You have to measure how quickly that happened.
Yeah.
So you have to say, well, did this just happen over a 30-day period? Then I say that's your signal to go ahead and put your house on the market, because the market's still good. It hasn't hit the news yet. And it's a great opportunity, because you look at the news right now, the Channel 3, 12, and 10 are doing, they got all these stories about, housing, even KTAR on the radio station, talking about how hot housing is. Well, they're about 3 months behind.
Yeah.
It's like, where you been? And that's what's going to happen when the market finally starts to slow down. It will have slowed down 90 days before some guy at Channel 12 says, hey, I think we should do a story on this.
Yeah. Yep.
So,
totally true. One interesting thing, like I said, we talked about rates have been pretty benign here. They've been sitting in this lull. I think they are eventually going to make a move. I think the next move in rates, my gut, like I said, I don't really, I look at the numbers. I read and I look at the data, but I also look at psychology. Psychology to me, and you can't read about psychology. You have to just kind of get all these sources, read articles, look at the rate, you look at charts, and that's why I read. But I think we are going to get that the next move up. The markets are saying that inflation is, it's going to be transitory a little bit longer, but then the reality sets in. It's like shit. They're going to stop. They're going to pull back on mortgage-backed securities, and rates will pop up. But one interesting thing is that's behind the scenes is that Mark Calabria, guy who nobody really liked on the FHFA, the Federal Housing Finance Authority.
Yeah, they got rid of him yesterday, right?
Yeah, Biden. There's something there. I mean, obviously, Biden, won a court case saying at 7-2 that I can't remember what the court case was. Basically, allowed him to fire him while he was in, and so he basically put in a new FHFA director. This lady, I can't remember her name, but that they're going to try to do housing, affordable housing, and all this. That's just something to kind of keep an eye on what she's going to do.
Yeah, I think one of the dangerous things that I see that scare me is the zoning. They want more multifamily in the suburbs because they feel that some people are oppressed and they're forced to live in these crowded neighborhoods near downtown, and simply because there isn't enough affordable multi-unit places being built in Paradise Valley. But what I don't like is they're proposing taking away local zoning and making it national. Now they're going to do it by saying, we have some grant money for you, but we can't give it to you with your current zoning.
Yeah.
And so that if this new person coming in is trying to put that kind of stuff together, that bothers me. My dad was on the planning commission in a small town, and I remember in high school he would talk about things that they were working on in zoning. I didn't know what zoning was. And then he explained it to me. Well, I'll give you an example. This guy built a garage without a permit, and guess what? He's 2 feet farther into the alley than he's supposed to be. So imagine if there were no zoning or building requirements and people could put their houses and garages anywhere they wanted to.
Yeah.
You wouldn't be able to drive down the alley.
Yeah. I had an interesting, several months ago, a broker of a real estate office I do business with that he absolutely, great guy with Realty One, and he's a managing broker, and he loves me. We've known each other for 15 plus years, and I've done stuff for him and stuff. But he said, we always say, the home ownership is at 64%. He goes, it'll always be there. I mean, if they're trying to increase home ownership, he said, and he gave me an example. He goes, you take 10 people, there's going to be 3 out of those 10 people that just really are never capable of owning a home just because they just don't pay their bills. They just, he goes, if you took 10 of your friends, you probably know there's a group of 10 of your friends, and there's Larry, Mo, and Jack. They're the guys that are just out drinking and have a good time. They just will never ever settle into a house. The 10 friends, and I'm like,
there you go, assuming that I have friends again. So
yeah. But I mean, but he's right though. I mean, we're never going to get probably higher percentage than probably 65 or 70%. I mean, if it went to 70, that's a big move because it's like 63, 64, 65% right there. But he said there's always those couple people that just will never have whether they make a lot of, make good money, but they just don't pay their bills on time and they're not going to get a loan.
Yeah. I don't know.
So I don't know what the government can do to, I do think the housing, they should get more lower end. They could pick an area that, they could build, some nice homes that are not, 3,000 square feet and tile, just, nice, they could. But then you're going to have to get subsidized by the builders. You're going to have to get subsidized by the government because they're, taking it in the shorts from a profit standpoint.
Yeah.
So
I'm going to go ahead and walk us out with this. This is from June this year from the Cromford report. Basically, they're saying for buyers, there's a lot of conflicting advice for buyers online these days, and there's no shortage of headlines advising them to wait. And we've been talking about that in the media. Wait. Mm-hmm. YouTube videos, crash is coming, okay? Many offers cite the unpleasantries of multiple competing offers and rising prices as the reason to wait out the market. Like we were just talking, yep, it's there, but keep swinging the bat. This is despite their acknowledgement that home values are not expected to stop rising in the near future and that interest rates are expected to eventually rise. It's undeniably more pleasant to purchase a home when there's a plethora to choose from and you're the only game in town. However, there's a reason you may not be the only buyer in that scenario. That's the end of a seller's market, and it signifies the top of price. So the top of price is either the beginning of a balanced market or a buyer's market. So either way, they're saying, you're going to have to wait to get to that balance. For sellers, typically this time of year, we start talking about the imminent summer slowdown in contract activity. As kids are out of school and people take vacation to escape the heat. Last year, the greater Phoenix market didn't experience this typical seasonal trend as trips were canceled. People stayed home. There was a large surge in purchase contract activity continued to the end of the year. This year, as people are getting back to some form of normalcy, it looks like we will see a seasonal slowdown in buyer activity once again. If this trend continues and the market follows previous years, we should expect contract activity to slowly decline by the end of the year. So they're basically saying that it looks like we're starting to get back to some seasonality now that people are out and about.
Mm-hmm. Yep.
And that will slow down some sales activity, which in turn starts to rise some of the inventory and eventually will balance out. But they are cautioning people to really try not to hang your hat on the headlines and just stay in touch with the numbers, because here you're going to learn and you're going to know the numbers. It'll not only make you smarter, but as we always say, it makes you a hit at all the cocktail parties.
Yep.
When somebody says, how's the market? You can go, I'm glad you asked that question. So with that, I'm going to wish everybody a fantastic weekend. And let's hope the fires go out. We've got rain coming next week, Pat.
Yeah, I know. Hopefully,
20%. We need, here I am with this trailer, wanting to go camping, and every forest is shut down.
Sucks.
I know.
Camp at home.
Yeah, that's right. Yeah. Well,
All
I'm
right,
going
buddy.
to a comedy shop tonight, so I'm just going to laugh tonight. So I'll have fun.
Good.
All right. Thanks, Pat. Take care,
Thanks,
everybody.
everybody. Talk to you.